anyone track ETF Pro performance? So Brian has a couple examples here. This was actually back from January 27. Somebody recently responded back to him, which is, I guess I missed it back at the end of January, but so apologies, Brian, but let's address it now. So I'll let you guys kind of read that. In summary, for those that are listening in or don't have the screen pulled up, I'm relatively new to Hedgeye and was really hoping ETF Pro would be the product for me. Started tracking when trades were added and removed, and the performance isn't great. Does anyone else track ETF Pro? He shared some recent kind of additions back in kind of late 2022 or early 2023. There's another kind of response there. Again, I'll highlight it for folks. It was from Michael 582. That's the next slide there, Genron. I've not done it recently over the last few months, et cetera, et cetera. Basically, ETF Pro for whatever reason didn't seem to be the right fit for Michael. We track the performance, and Genron, if you want to kind of show that, that's slide 14. I think, this is the current list. I apologize. The next slide, 15. There you go. Perfect. This is a relative return for the dollar, for instance, is 22.9%. This is pulled as of this morning. Again, this is not investment advice, and just kind of showing if you kind of tracked it yourself, this is kind of the performance you'd see, right? So some of the things that we've been long for a while, which would be UUP, long would be UUP. We had a GLD and BTAL back in November. And then from the short side, we've been short XLK, XLY, high yield junk, even Qs and IWM going back to Q1 of 2022. I think the big thing here, and something that I covered briefly last week, but ETF Pro narrows down the thousands and thousands of potential places to go hunt. Right, there's thousands of ETFs to choose from. It's a curated list. Where to hunt and where to stay away from. So whether you can short or not, I think the short list it's red for a reason, and that means stay away from it. Right, so stay away from tech, stay away from consumer staples, stay away from the Qs, from high yield products, and then the green is like the green lights, right? So it's a much shorter list of greens here in a quad 4 environment. A lot of them have a gold or longer duration sort of tilt to it factor exposure, and then we recently added Taiwan as well, which obviously is can benefit from the China outperforming and being one of the sole larger global leaders in a quad 1 environment. But regardless, I think we in a choppy environment. So Genron, if you go to slide 16, just want to show the VIX there. The VIX, which is the S&P volatility, has been north of 19 for most of the last 15 months. So again, this is a very choppy environment. You're going to see coach sees, look at his signals, add things, remove things, and try to make those decisions relatively quickly so that he pulls those off the board and tries to stick with something that he's coached quite often since I've become a subscriber back in March of 2020, is that you got to ride your winners, right? So ride your winners and press your losers, ride your winners and cut your losers. And on the short side, you want to press those that are weak, right? That have a weak signal. So again, just want to kind of set the stage here in terms of this is what the VIX has done. It's basically been almost like a 2-year look back in terms of what we've experienced, both coming out of sort of 2020. Just want to kind of show everybody this is the environment, right? If you kind of pull the I guess the scope back, you've got for the most part, certainly through almost all of 2022, the VIX lived north of 19. Just if you go to the next slide there, Genron, that's the S&P. Right. So again, there's been ups and downs, bear market rallies, but also a lot of opportunity to sort of make decisions and execute either at the low end of the risk range, which would be covering some right on the short side, and at the top end of the range, which would be selling some as well. So if we kind of look at it along here, we'll go with UUP, the next slide. Again, this is a longer term look back, to all the way back to 2021. We were not long the dollar in throughout 2021. We added it in January of 2022, so that'd be kind of like right in the middle there of that slide, or of that graph, that chart. And it was an absolute beast. It went into beast mode for all the way up until basically like late Q3 of 2022, right? But in between there's lots of incremental buys and sells and opportunities to take wins and add back to the position. And so again, I just kind of want to like set the stage, even with this like big ramp up, right? So this isn't just capturing. So again, that relative return is just like from point A to point B, right? So it's on the close of the date that it was added, and the current price was this morning, or like earlier this morning. So my point is that this has been a great winner and a big time relative outperformer, especially versus the S&P 500. If we go to the next slide, the XLK was obviously one of the ones that is one of the ones, along with XLY, that we've been short the longest, going back to early February. And again, we do not preach like short, to short and hold, and that's certainly not something that we would advise. But at the same time, if you pull up that kind of that relative performance, it's basically flat. You're down negative 2.3%. So we've recently been adding back to our XLK shorts in the last couple of days. And again, you've got a big time, ups and downs, a lot of volatility here. And that is reflective of the VIX being in the chop bucket. And when you're in the chop bucket or in the F bucket, so the chop bucket, just as a reminder, is 19 to 29, and the F bucket is north of 29. So when you're in that environment, you really got to be a lot more active. You can't just be, basically a buy and hold or short and hold type passive investor. And it's just not going to work. It's just not going to work. I mean, it's pretty simple. So again, just kind of want to like walk folks through here in terms of, what the environment's been. And even in this choppy environment, our performance has been, I would say, pretty damn good. So kudos to Coach, right? And hopefully it's been really helpful for those at home. And again, I'll just reiterate that it narrows down, right? So ETF Pro is a product that narrows down where to hunt. So it takes all of that work in terms of sifting through the thousands of ETFs out there, and it helps just sort of zone you in on the things that may that hopefully will be outperformers on the long side and will be underperformers on the short side, in terms of aka staying away from them, so selling them if you are long them, or just outright shorting them, and hopefully generating some alpha on a relative basis. The other thing too with ETF Pro, you do get the trend risk ranges. So those are the longer duration risk ranges on a weekly basis on Monday mornings. So again, those will, I would be tracking those, writing them down, and reviewing on a week over week basis what those risk range is doing. Are they putting in higher lows or lower highs, lower lows, et cetera, right? So how are they kind of, what's the signal looking like on a week over week basis? That will also help you determine kind of, what pieces of the puzzle or what pieces of the inventory are kind of looking better or worse, right? So that should also help. And so hopefully that was a good rundown.